Welcome to Industry Focus, the show that dives into a different sector of the stock market every single day. Today is Wednesday, April the 10th, and we're talking healthcare. I'm your host, Shannon Jones. I am joined via Skype by healthcare guru Todd Campbell. Todd, how are you?
Hi, Shannon. How are you doing today?
I am doing well, thanks. I'm super excited for today's show. We're diving into one of the hottest areas in terms of investments in the biopharma space. That's none other than the gene. So we're going to kick things off talking a little bit about the latest billion-dollar partnership deal, and then we'll be serving up 3 top genomic stocks that every listener should at least be watching, if not adding to your portfolio. Todd, let's just kick things right off from the beginning. This billion-dollar partnership deal, really not necessarily a new deal. I would consider it more strengthening a deal between 2 massive players in the space. First off, Alnylam Pharmaceuticals, that ticker symbol ALNY. Best known for their gene silencing platform, which we'll talk a little bit more about. But they announced they'd be strengthening their partnership with one of the most profitable drug makers in the S&P 500. That's Regeneron, ticker symbol REGN. Todd, interestingly enough, analysts actually seem to like the deal. Seems to make sense for both. But the market wasn't necessarily cheering for this deal. Immediately after the news came out, Alnylam was down about 3%, Regeneron down about 2%. Todd, what's the deal with this deal?
Yeah, it's a big collective yawn by Wall Street investors on the deal, despite the size. And I think that just may be reflection. Well, there's an issue that we'll get to later on as we're talking about this that has to do with Sanofi. But I think it may also just be, a lot of investors get involved in some of these biotech companies because they're hoping for that big buyout. And every time a licensing deal gets done, it's like, oh, all right, well, I was hoping that deal would be for lock, stock, and barrel, not just for a few programs. So let's dive in, right? Let's talk a little bit about the deal. Let's talk about what it is that Regeneron's hoping to do here with Alnylam. Alnylam is probably the best way of thinking about it. If you think of the DNA as being the warehouse, RNA is the delivery person. It's the UPS or the FedEx, if you will, of the genetic instructions used to create proteins. Oftentimes in genetic diseases, the overproduction of proteins contributes to them. So Alnylam has developed a platform. They've been around a long time, Shannon. They've been around since 2003. They developed this platform that uses something called siRNA to silence or interfere with the expression of that messenger RNA and thereby prevent protein production in as a way of targeting or improving outcomes for patients. As I mentioned, they've been around a long time, but Shannon, they've only have one drug that has passed the gauntlet, if you will, and that's Onpattro, which is used in a relatively small indication called HATTR amyloidosis, and that's a relatively small market. And that drug put up about 12.1 million in sales. Yeah, 12.1 million in sales in the fourth quarter. So they've been around a long time. It's a really fascinating, exciting technology that they're working on, but it's very complex. And what Regeneron is hoping is that by taking their experience in monoclonal antibodies and Alnylam's experience in RNA interference and merging the two together, that they'll be able to go out and develop better therapies for eye disorders and central nervous system disorders.
One of the reasons why I think this deal makes a lot of sense is, so you talked about Regeneron. They've had this antibody approach, really going after these targets outside of the cell, whereas Alnylam has really been about inside the cell, as you mentioned, the RNA. And so as a collaboration, this deal between the two, it really kind of makes sense because this is really about finding more targets, identifying early candidates early on for this pact. Let's talk a little bit about the deal. Regeneron paying $400 million upfront, buying Alnylam equity. That's another $400 million there at $90 a share, $200 million in early milestones. This deal also includes a series of programs with 30 targets over the next 5 years, with an option to extend, of course. Regeneron also hands over $2.5 million every single time Alnylam initiates a program, and another $2.5 million for identifying promising leads. So a very heavy front-loaded deal. I think all all in all, though, it's very interesting, very compelling. And honestly, for Alnylam, this couldn't have come at a better time. You mentioned the one drug that they have on the market, Onpattro. They really have needed a cash infusion as they wait for sales to really ramp up for that drug. Now they're getting that with this particular deal to keep things going. Also, in addition to the cash, just validation of their tech platform. They already had a partnership deal looking at NASH targets, fatty liver disease with Regeneron. This just beefs up that partnership for them. And really, Alnylam is getting access to Regeneron's just treasure trove of genetics. And I think that's really what this deal is about.
Yeah, it's an interesting deal. You mentioned the equity stake. I think it's important for investors to know that's pretty much right where the shares were trading. So it wasn't to a premium or anything like that. And maybe that's one of the reasons, too, that, investors kind of yawned. It's like, oh, well, you didn't buy it lock, stock, and barrel, and you're not paying a premium for the shares that you bought. They're going to own somewhere between 4 and 5% of Alnylam when it's all said and done. Regeneron's going to take the lead on any eye disorder drugs that the two develop. Alnylam will collect milestones and royalties on those drugs. That makes sense to me, right? Because Regeneron markets Eylea, which is mega blockbuster drug, over $5 billion in annual sales. So, they always have a lot of experience within the eye disorder area. The two are going to alternate leadership on anything that they develop for CNS disorders. So one will take the lead and then the other one will take the lead. And then both will have the option to be able to share equally in the profits if any of those drugs ever do make it to market. And then, of course, they're also doing a little bit of work on some liver targets. They didn't get into a whole heck of a lot of detail on that, but they are going to take one of Regeneron's existing drugs that's in phase 1 and run a combination study with one of Alnylam's existing drugs that's already in phase 2 and see whether or not, they have some success there in that combination trial. Regeneron will be the one that's taking the lead, and Alnylam has a chance to get royalties on that too. You mentioned the influx of or importance of cash. This company Alnylam spends a lot of money on R&D. This is expensive research this company is doing. This will boost, however, their cash on their balance sheet to about $2 billion, which certainly gives them some financial wiggle room, so investors don't have to worry about the lights going out anytime soon there.
We talked a little bit about timing for Alnylam, and I love the term that you used for this, Todd. You said they renegotiated their deal with Sanofi. I think for all practical purposes, it sounds like they're pretty much ending this 5-year pact that they have. Granted, there is a lot of negotiation because there'll still be some ongoing royalties and the ability to commercialize some products should they actually move forward in development. But it's just interesting. On the heels of ending this pact with Sanofi, they've got now this strengthened partnership deal together. Another interesting thing to me, too, here, Todd, is that you see here both of these companies are opting to work together, not necessarily one buying out the other or even waiting for a big pharma player to come and take one another out. Do you think that this is kind of a changing of the tide where you'll see more of these stellar biotechs partnering rather than one going after the other?
No, Alnylam is expensive stock. I mean, I think it's trading between market caps between 9 and 10 billion. That's a lot for a company that generated out 12 million in revenue in net product sales, I should say, in the fourth quarter. So it could very well be that, this is exciting research, but even with Onpattro, there's still enough questions of whether or not you can develop blockbusters using this approach. So maybe that's just a safer way for Regeneron to get involved. The thing that's interesting, and one of the reasons I think the stock did not make it really any headway yesterday, was that as part of that Sanofi renegotiation, basically the ending of their 5-year development deal, collaboration deal, they did agree to get rid of the lockup period associated with the shares that Sanofi owns in Alnylam. And that's not an insignificant amount of shares. They own about 10%, Sanofi does, of Alnylam as of December 31. So if Sanofi starts to unload or unwind those shares, that could create some headwind to the stock price, and maybe some investors were a little bit cautious or worried about that, on top of the fact that it indicates that Sanofi has no interest in buying Alnylam lock, stock, and barrel.
And Sanofi has a long track record of ended, some would say failed partnerships along the way. So not terribly surprising here, but a lot to watch, especially with that lockup now no longer being an issue. We'll have to keep an eye on this one and definitely keep our listeners up to date. But let's turn our attention, Todd, to stocks, because ultimately at the end of the day, I want to make sure our listeners know that we are good podcasters here in the world of finance, and we're going to give you some stock ideas. So we've got 3 top genomic stocks that you should at least be watching, if not holding in your portfolio. Really covers the gamut of from gene sequencing to low-cost genetic screening to a biotech with some late-stage assets that could hit the market very soon. Let's start with the first giant. That is none other than gene sequencer Illumina. That's ticker symbol ILMN. Todd, what makes Illumina so special in this space?
Well, Shannon, there's a lot of stocks that we could have chosen to do this show and talk about genomics. Very disruptive, rule breaker-ish style stocks. And we narrowed it down to 3, but by far there's a lot of other companies out there that were attractive and made it hard. In any conversation that you have when it comes to genomics, you have to bring up Illumina, and that's because by Illumina's number crunchers say that their machines have been used to do about 90% of all sequencing in discovery since ever done. So, I mean, that's just remarkable. And what we're talking about here is the ability to go out and sequence the actual DNA for each gene to be able to better identify disease targets, traits, anything that you can imagine. I mean, they're starting to think about ways that they can use this technology to figure out what kind of wine you like. I mean, there's so many things theoretically that our genetics may be able to tell us or inform us of in the future. And Illumina is just a giant. It has the majority of the market share in this market for the systems that are used in gene sequencing. Matter of fact, last year its sales were up about 21%, 21% to $3.3 billion. And as we've talked about in the show before, Shannon, we love companies that have kind of that razor and blade model, right? Where they're able to sell the machine, but then on top of that, they're able to generate recurring revenue every single time that machine is used. And that is great, because it means that, you have some clarity into high margin revenue. And last year, sequencing consumable revenue at Illumina was up 23% to $1.8 billion. So, this is a company that generates out billions of dollars in revenue in a market that continues to grow. And we're finding newer ways of applying this information. So it's my expectation that, they'll be able to continue to deliver this kind of double-digit growth for a while.
And the headline for Illumina is always about how it's been able to drive down the cost of sequencing. Their machines have been able to lower the cost from, thousands of dollars to now it's below $1,000 for the first time. Illumina is hoping to take that down to $100 per sequence, which really opens up the door for just access, more affordable healthcare and research. And ultimately, Illumina is really about just not only cheaper, but also faster. So they've got short read sequencing. They also had the acquisition with Pacific Biosciences in late 2018. So they've got now the most comprehensive sequencing portfolio out there. You mentioned 90% of the market. Their installed base is just massive and continues to grow. You were talking a little bit about financials. It's interesting. They've been able to grow revenue in 2018, 21%. They're actually for 2019 guiding a little bit lower. Top line revenue expected to rise between 13 and 14%. So a slight slowdown, but it's interesting in that this would still mean this would be the 21st consecutive year of top-line revenue growth, which is just all in all impressive. They are continuing to invest and become even more innovative. About 20% of revenues goes back into R&D. This is a company that will be around for a very long time. addressable market, I don't even think we have these stats to adequately put a dollar figure on that, because as you mentioned, Todd, there's just so many areas. Consumer genomics, all this prenatal testing, there's just so much that they could be doing. This is a company that if we did not bring this up on the show, we would be doing our listeners a disservice, Todd.
Yeah, the NovaSeq, which is their most recent launch system, that's barely even scratching the surface. They've shipped 600 of those systems exiting 2018. That was up from 285 installed systems at the end of 2017. And on their conference call, Shannon, they said that 75% of their prior generation HiSeq installed base hasn't even taken a look yet at NovaSeq. So they think that this is basically as an upgrade cycle that's going to create tailwinds for multiple years. So yes, there's a slight deceleration, but you're also talking off of a much larger base. We're still talking about 13 to 14% top line growth. And because they have the scale now, they're a very profitable company. I think that, they're looking for $6.07 or more this year in earnings on a GAAP basis, and that would be up from $5.56 last year. And then you mentioned really briefly the PacBio acquisition. That's great because, Illumina is known for their short read systems, which are fast and cheap. But, increasingly people want to be able to do longer reads too, because, DNA can be complex and a lot of times it can include really long repeats, and short read just doesn't work well with long read when there are long repeats. So now being able to take PacBio's technology and be able to market a product that allows you to say, hey, you can do both long read and short read depending on the situation, or use of both of them together to get the deepest level of understanding. You mentioned also the drivers, the total addressable market. You're right. We don't know. I mean, it's a huge market. There's billions of people on this planet, and most of them don't have any idea what their genetic profile looks like. Right now, in the short term, I would say that oncology gene sequencing for things like tumor profiling and liquid biopsy, those are big drivers. You mentioned prenatal testing and neonatal testing. That's very important, obviously. And then you've got population sequencing. A lot of countries going out there and trying to create these big databases, treasure troves of information about their populations that they can use basically as their baseline.
Illumina isn't cheap by any means, Todd. Right now, stock traded nearly 58 times trailing earnings. You're looking at over 40 times expected earnings. And even when you factor in growth over the next 5 years, you've got a PEG ratio over 2. So not cheap, but I think we can both be in agreement here with a stock with such a long growth runway ahead of it. I'm willing to pay a premium here for a stock like this. Let's turn our attention to the second stock. And it seems like right now, just about every biopharma company has a gene therapy candidate in its pipeline, or at least seeking to gain access to one. But only a handful are nearing the approval finish line. Even fewer candidates have candidates that could potentially be blockbusters. The next stock checks all of those boxes, and that's none other than Bluebird Bio. That's ticker symbol BLUE. Todd, Bluebird has potentially 4 drugs with an initial filing or launch by 2022. More importantly, multiple shots at those blockbuster opportunities. Todd, this is another company with a massive opportunity ahead of it.
Yeah, one of the most successful pipelines so far. I say so far because, again, you have to get those regulatory approvals. But to have this many gene therapies that are in late stage studies and approaching commercialization is pretty remarkable. And, we've already seen the value that is created by getting those gene therapies across the finish line. When we had the show not that long ago, when we were talking about the bio to spark therapeutics, as just a refresher for listeners who are new to the show, we're talking about using gene sequencing and gene screening to identify the mutations that it can exist in their DNA that can cause or contribute to disease, and then the developing of payloads that can be delivered using inactivated viral vectors to specific spots of a person's body to be able to create a genetic fix, if you will. So, one and done style of therapies, or at least very infrequently having to be given therapies, right? You mentioned that everybody's involved in this. You're right. I mean, I think the last data that I saw, there were about 2,000 clinical trials ongoing for gene therapies, and that's just remarkable. But as you said, there's not that many that have these therapies that are very close to the finish line. The one that is most likely to get approved first for Bluebird Bio is a newly minted name, by the way, Shannon, Zynteglo. I guess that's how you pronounce it. I haven't gone in and looked. Would you agree with that, Shannon? You think that's Zynteglo?
Maybe. I'm still going to stick with lentiglobin. Simple, easy. That's what my brain is going to anchor to, Todd.
Formerly known as lentiglobin. This is going to be a therapy that, if approved, will get used in the European Union in patients who have transfusion-dependent beta thalassemia. Basically, these patients have to take blood transfusions throughout the course of their lifetime, which can expose them to organ damage caused by iron overload. That's not a good thing. There is the potential for these patients to receive stem cell transplants, but not everybody qualifies for those, and there are a lot of risks associated with it. So the potential to be able to take a gene therapy, use it, lentiglobin, Zynteglo, use it to be able to deliver a functioning gene that removes the need to have to get those transfusions is potentially game-changing for patients and for actually the healthcare system, because theoretically, if you don't have to give a transfusion every month, you're saving a lot of money over a patient's lifetime.
And assuming lentiglobin gets approved in the EU, as you mentioned, and also, too, in the U.S., it sounds like they're expecting to file by the end of the year, which means it could be on the market as soon as 2020 here in the U.S. But any positive read-through they get on beta thalassemia obviously is positive for sickle cell disease, which lentiglobin is also being studied in much bigger total addressable market than beta thalassemia. So we'll certainly have to keep our eyes on that. But they also have a pipeline that is full of CAR T, chimeric antigen receptor T cell therapies. CAR T, as we have talked about a lot on this show, is really a way to take the body's own immune system, supercharge it, and target and fight cancer. So they've got BB2121, which is their CAR T therapy looking at multiple myeloma indication. That's expected to read out data later this year. If the results are good, this could mean a potential FDA approval also happening in 2020. And then they've also got BB21217 also in their pipeline that we'll have to keep an eye on. And then finally, we've got Lenti-D, and that's being studied for a rare genetic disorder. I'll just call it CALD. I'm not even going to try to pronounce that one, Todd. But
smart, Shannon, smart.
This is also known as Lorenzo's oil disease. I think we've talked about it on the show before. Really, right now, for those patients, the only treatment option is a stem cell transplant, which not everybody is eligible for. So a very high unmet need area there. All in all, Bluebird Bio, multiple shots on goal, not just blockbuster opportunities, Todd, but even, as you would call it, mega blockbuster opportunities.
Yeah, the multiple myeloma, Shannon, is the one that gets me most excited because, they teamed up with Celgene on that. And if there's no player out there in multiple myeloma that's bigger than Celgene. I think Celgene in 2018 racked up about $12 billion in that indication alone. So they obviously have the connections and the contacts and the experience of that industry to be able to get this drug in front of people and hopefully drive its use. If approved, BB2121 would begin being used in, I think, fourth line or higher. Trials underway that could make its use further earlier and earlier and earlier, theoretically could end up turning it into a standard of care someday. If it's as successful as so far in trials it has been. We've seen overall response rates of about 90% for BB2121, and we should get an update on trial data, I would assume, relatively soon. Wouldn't shock me if in June at ASCO we see something. Who knows? You mentioned it, just going back to the European approval for lentiglobin. They did get CHIMP's advisory committee in Europe did recommend for approval. Usually the approval comes within 60 days of that. So we should find out relatively soon whether or not that therapy is going to launch. And then something people are going to have to keep in mind is, how are these drugs going to get priced, right? Because they're one and done style of therapies, right? So, what's the portability going to look like? How are you going to track outcomes? Are you going to have payment programs that are going to last multiple years rather than just say, pay me a bunch of money up front? All of these things are solvable, though, but something that, people who are investing in Bluebird Bio want to be aware of.
Yeah, very good points. Bluebird Bio right now, market cap, $8.8 billion currently, company with no approved products on the market. But that could soon be changing here over the next year or so. And if these lead candidates are successful, this is a company that really could be worth a whole lot more. Let's turn our attention to the third and final top stock idea. We talked about cheaper gene sequencing in regards to Illumina. But for a company that is really about just building greater access to genetic screening, there's no company better poised to do this than a smaller player on the list, and that's the company Invitae. This is a company that's really kind of had a bumpy road along the way. A little over a year ago, Invitae hit an all-time low of $4.35 a share. Stock now up over $24 a share, market cap just over $2 billion. I mentioned smaller player, but I think this is a company that's really been able to carve out a niche for itself, which I think bodes really well for the long term for this one.
This is maybe the most rule breakerish of these stocks. Obviously sky high valuation, but massively disruptive technology. Their goal, Shannon, is to take something that would cost in the past tens of thousands of dollars to screen a patient and be able to figure out what kind of predisposition they might have to disease or what kind of treatment might work best in them, say for cancer or something like that, and drive down the cost of that test and those screenings so low that everybody would be able to go out and have their have a genetic test done that tells them what the predispositions are. And that's just crazy, right? To think that you could get this thing, a test down so inexpensive that everybody's buying it like they have their own, they buy a TV, right? Everybody would know it. And they're making some really, really big headway in the past year, validating this concept, this ability to provide genetic screening to the masses. They've driven their cost of goods sold down below $250 a test. And, if you look at the average of their test revenue last quarter, I think that they made slightly more than they sold it for slightly more than $500 per test. Company is not profitable, though, because on an operating basis, they're still plowing a ton of money back into research and development, and of course, into the sales and marketing necessary to get out in front of people. But it does start to get to show you a little bit about how, what the future could look like for this company. It kind of reminds me a little of Exact Sciences, and how there were a lot of people that were naysayers about the ability of having, basically this, at home, go to the bathroom inside of a box, ship it to a lab for screening of colon cancer. A lot of people were poo-pooing that concept. And, sure enough, they've been able to turn that into a very fast-growing business, generating out hundreds of millions in revenue. And it looks like Invitae is kind of being successful here in doing something similar in their own market niche. I mean, their revenue more than doubled last year.
Yeah, so for 2018, triple-digit year-over-year growth. Sales jumped 117% year-over-year to $148 million. Did more than 300,000 tests, and that's more than double the test volume they did the previous year. Expected to continue. You mentioned margins. Gross margins did increase 46% year-over-year, so something I really like to see on a company that is attempting to scale. For just comparison purposes, competitors have gross margins hitting around about 75%. If I can even just see a company like Invitae, and of course that ticker symbol NVTA, even just push that needle to 50% over the next year, that basically means that they can continue to fund operations just based off of sales and just improved efficiency overall. One thing I want to watch here is that they're looking to launch a direct-to-consumer channel where a patient can basically order a genetic screening test directly. That, of course, has its pluses and minuses, particularly when it comes to interpretation and counseling that should go hand in hand with direct-to-consumer genetic tests. We'll have to see how that goes, but if that opens up and they've got, the regulatory okay to do that, they've got the proper infrastructure in place to support it, that could be a huge opportunity for this company too.
Yeah, and 23andMe kind of paved the way a little bit in that, showing a way that you can do it, because 23andMe includes health screening options in there. And then, of course, you have disclosures that you have to provide to the patient, and you have to make available some amount of counseling or access to people based upon what your genetic findings are. And so it'll be interesting to see, how they do it. But you mentioned 300,000 tests last year, double 2017. They're looking for 500,000 tests this year. So not a doubling, but still pretty darn significant. And that should push their revenue above 220 million. So, still tremendous amount of sales growth coming in 2019. And then if you go to their conference call, I always look through the conference call, Shannon, because I think it's just a treasure trove of information. And they fully intend, this is what their quote is, we fully intend to reach 1 million people in 2020 alone. And one day, billions of people on the planet. Well, obviously that's an auspicious goal, but if they can deliver on 1 million in tests in 2020, that would be pretty remarkable.
Remarkable to say the least. So you've got a stock here, rapid growth, large addressable market, margins heading in the right direction. I think this makes it an easy case to add Invitae to the list that our listeners should at least have on their watch list, if not already in your portfolio. And Todd, I think we can safely say that we ended this week's show with plenty of stock ideas that check a lot of the boxes that we like to see as investors. And that'll do it for this week's industry-focused healthcare show. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. This show is produced by Austin Morgan. For Todd Campbell, I'm Shannon Jones. Thanks for listening, and Fool on.